Hello, this is Dr. Chef from The Standard. I want to go through with you what happened in the past 2 to 3 months in the global stock market. From January to mid-February, investors were so exciting as the Nasdaq index had climbed to all-time high at 14175 on 16th of February. At that time, people make money so easy. And I heard that people try to quit their own job and turn to be a professional investor. Especially, they are excited in the day trade to make money, hopefully 5 to 10% per day. Whenever I hear this kind of speech, the market always have some trouble. The money making is so easy when people try to follow ARK investment, the fund manager Kathleen Wood, to buy shares what she has bought. I remember just before the Chinese New Year when she announced that she had purchased some shares in Ping An Good Doctor, code number 1833. So the next day, if you follow what she has done and buy in Hong Kong stock market, the share price of Ping An Good Doctor immediately went up about 20%, so that you can make good money for the Chinese New Year. So when people try to trace this kind of news to buy shares, there's always some trouble coming out. In US, the individual investor were also very excited when they received the paycheck or the check from the US government. So there was a story about GameStop. The individual investors has successfully beaten the hedge fund manager and pushed the share price of GME to a sky-high level, forcing the hedge fund managers who had short sold the share and have to buy back the shares at a high price and lose big money. So this is what happened in January to mid-February. In mid-February, when the global stock market index were at all-time high level, some bad news start to come out. During the pandemic, Federal Reserve Board in US had give some relief to the bank so that their capital ratio can be less and provide more liquidity to the market. So this is called the statutory leverage requirement, SLR. But in March end, the Federal Reserve Board stopped this relief. So the banks has to raise their capital again to fit this requirement. So they have to sell the US Treasury bond in the market. When the bond price dropped, the yield increased to 1.77% level. So people start to be skeptical. They think the interest rate and the inflation will rise. If the interest rate rise, it will not be good to the stock market. So they start to sell shares and make use of this excuse. But actually, this is not the real case. As I mentioned before, short-term inflation went up is just temporary and cannot be sustained. When smart investors start to take profit in mid-February, not many investors follow. But as the share price keeps falling, more and more investors start to be alert and start to follow. Actually, the sell-off was quite scary. For example, share price of Tesla fell from 900 US dollar to as low as 539 US dollar. Percentage loss was 40%. Futo online broker fell from $204 to $99.8. Percentage loss was 50%. So people just use the excuse of higher interest rate expectation to sell the shares. But the main reason was that people make money too easy and attract too many individual investors to speculate stock. And this always followed by sell-off and a deep correction. But it is just a deep correction. As I mentioned, it's not turning from bull market to bear market, because the liquidity is still there. Why did I say that? Because when Nasdaq shares drop, actually the Nasdaq index just fell by 12.5%. That means the big shares such as Microsoft, Facebook, Google, which was mainly held by the fund managers, did not fall too much. And fund manager tried to dump the high-rise share such as the electric car shares or the software or the medical shares or the iCloud shares, which rise too much. Actually, they switched to cyclical shares. So that's why I said the liquidity is still there, and the Dow Jones Index actually kept rising and near the all-time high level. US government still need the liquidity to stimulate economic recovery. Joe Biden's government had planned a $4 trillion stimulative budget in infrastructure, medical, education, and social welfare. So this is what happened in US, and they need plenty of money to support and stimulate economic recovery. It was said that the corporate tax may increase from 21% to 28%. Corporate tax may increase from 21% to 28%, and vaccine injection will be more popular. So hopefully the economy can resume to normal a few months later. The market's major sell-off finished when the clear signal came out. What was that signal? The Archegos Capital. The fund manager was Bill Wong. He is a Korean. He cannot satisfy the margin call from his investment banker, such as Goldman Sachs, Morgan Stanley, Nomura, and Credit Suisse. So these investment banks dumped the shares worth totally $80 billion US. So this is the final sell-off, and we can see that it happened in late March. So after this sell-off, the biggest selling pressure finished, and the market started to go up again. So look at the last index chart. You can see that the market has formed two legs. One leg is higher than the previous one. This is very good technical issue. And if you look at the MACD, there's a buying signal happen on April 1st. So this is the turning point of the market, and now Nasdaq start to go up again and it's not far away from the all-time high, just a few hundred points away from the all-time high. And actually last 2 to 3 days, some big cap shares already cleared the all-time high. The better share, the good quality shares went up first. They include Facebook, Microsoft, Google. All these 3 shares, the share price has already went to all-time high level. So don't be bearish and keep your confidence, because there are so many shares. After the share price correction, they become attractive. A few shares in Hong Kong I want to recommend to you. China Blue Chemical 3983. I like it. I still like it very much because of urea price. I think it will go up. Second one, Higher Smart Home, code number 6690. Number 1 electrical appliance company in China, and benefit from the consumption in China keep growing. So these 2 shares I still like, 3983 and 6690. And if US implement infrastructure plan, and the copper price will rise again. So Jiangxi Copper 358. So share price become very attractive after correction. And another share I liked, Baidu 9888. Performance was not that good after listing, but don't worry. When people discover its potential in the AI and the electric car development, share price can easily rise back to higher level. So these four shares, and also Tencent, and Tencent you should also consider. The biggest shareholder, Naspers, has just dumped 2%, and because Naspers is holding Process, and Process need the money for development to invest in other high-tech industry, so they need the money. So after Process dumped this 2% Tencent shares, they still hold 28.9%. So there's nothing special, just normal business transaction. And they promised that they will not sell the share again in the coming 3 years. So again, Tencent is a good share to buy. So don't worry that Process has dumped the share, dumped 2% and then raised 114 billion Hong Kong dollar, because they need this money for other investment. Okay, this is what I want to share with you today. Goodbye and good luck.